Hey there, Hector Deville here. In this particular video, I'd like to introduce my two advanced Forex indicators, the trend scanner indicator, which is this one up here, and the Forex currency index. These are two high-profile indicators that have been custom coded for me by my professional programmers, so therefore you cannot find them anywhere else on the internet. And over the following minutes, I'm going to explain what are their main characteristics, what trading principles they've been built up on, and more specifically, how I use them in order to gain an edge over the markets, all right? An edge on my trading. All right, let's get going. Okay, let's start off with the trend scanner indicator. The trend scanner basically is a trend sniffer. It tracks in real time the Forex market across the board, searching for solid trending market scenarios. Okay, it goes into every single currency pair, and I mean every single currency pair, all 28 major currency pairs, and on every single time frame, from the 5 minutes time frame to the weekly time frame. Obviously going through the 15 minutes time frame, the 30 minutes time frame, the hourly, the 4 hours, the daily, and again finally the weekly time frame. Now, why did I ask my professional programmer to work on this indicator? Well, quite frankly, because searching for profitable trading opportunities, it's rather time consuming, isn't it? So I really wanted a tool, an indicator that would pinpoint which particular currency pairs are trending right now in real time, and if so, in which particular time frame. Okay, here's how it works. Here on the left hand of the indicator we can find all the different time frames, from the 5 minutes time frame all the way to the weekly, right? So this indicator can cater for both intraday traders and long-term traders. Now, down here we have all the different currency pairs. We have the euro against the American dollar, the sterling pound against the American dollar against the Japanese yen, etc., etc. All 28 major currency crosses in the Forex market. Let's assume I am a daily time frame trader. My favorite time frame of choice is the daily time frame. So what I need to do is to simply look into this into this row here to see what particular currency pairs are trending in my desired or in my favorite time frame of choice, right? And therefore, with just one quick look, I can pinpoint which particular currency pairs I need to follow for the rest of the day. That means that I will not have to manually comb through every single currency pair, right? And therefore, can you imagine how much time I save up in my day by not having to actually look into all those different currency pairs? I just look into my trend scanner indicator and I see that on the daily time frame, the euro against the American dollar is right now downtrending. The sterling pound against the American dollar is also downtrending. The American dollar against the Swiss franc is uptrending, etc., etc. Those currency pairs colored in gray means that, well, that basically means that they are not either uptrending or downtrending, they are rather range bound. Anyway, enough of talking, let's actually see the trend scanner in action. Let me just pick any random reading here. For example, this one, the sterling pound against the Canadian dollar. On the weekly time frame, the indicator is calling for a solid downtrend here. Alright, do you see that red square there? That means that the sterling pound against the Canadian dollar on that particular time frame, the weekly time frame, is downtrending. Let's move into my charting platform. Let's see if I can find the sterling pound. Not this one. Oops. I have a little bit of a messy charting platform. Alright, here it is. The sterling pound against the Canadian dollar, weekly time frame, and yeah, well, we can certainly see how the trend scanner was certainly accurately calling this downtrend for sure. Alright. Let's pick another random example. The sterling pound against the Australian dollar. Also a downtrend here. It's also the weekly time frame. So let me show you the weekly time frame for the sterling pound against the Australian dollar. Let me pull this out. Not this one either. Alright, here it is. Downtrend here, well, yeah, certainly a downtrend, isn't it? That's quite a beautiful downtrend, in fact. So good job for the trend scanner there. Let's pick another example. Why not? This time around, let's search for an uptrend. There is one here on the Canadian dollar against the Swiss franc, right there. Do you see that one? On the daily time frame, the trend scanner is calling for an uptrend with that green square on the Canadian dollar against the Swiss franc. So let's go into my charting platform once again. Not this one, not this one. Oh, here it is. Canadian dollar against the CHF on the daily time frame. There it goes, that beautiful uptrend. You see that? So as you can see, if there is any trending bias, any solid trend whatsoever out there at this precise moment, no matter the time frame, no matter the currency pair, the trend scanner is gonna find it for you. And the best thing is that you don't need to do a thing. You don't need to waste one single minute searching for the trends yourself. The trend scanner will do it for you. Oh, and by the way, for all of you wondering, the trend scanner is a real-time indicator. It means that it's not a lagging indicator. Actually, 90% of the indicators in the Forex arena are lagging, meaning they fall back behind price. By the time you get their signal, price has already moved away. The trading opportunity is gone altogether. Well, the trend scanner, in the other hand, is a real-time indicator. That means that if the trend scanner is calling for a trending scenario right now, that means that at that precise moment, that currency pair on that time frame is indeed trending right now. Not before, not 10 hours ago, not 5 minutes ago, not 3 weeks ago, right now. Sweet, isn't it? Alright, now let's move into the Forex currency index, which, well, it's my baby. I mean, what can I say? The trend scanner is awesome, but the Forex currency index is my baby. It's my best creation so far. Okay, now the Forex currency index tracks inherent market strength and weakness. It basically goes behind the scenes and it checks which currencies are strong or weak across the board. And please mind that I said currencies, not currency pairs. Alright, here's the deal. As you know, the Forex markets are charted in currency pairs. Okay, you need to cross two different currencies. For example, the euro against the American dollar. If we have our standard euro against the American dollar chart, we can determine whether the euro is strong or not in terms of the American dollar, right? If we are seeing an uptrend, that means that the euro is gaining strength if compared to the American dollar. In the other hand, if we see a downtrend, well, it means that the euro is losing strength if compared to the American dollar, or what's the same, the American dollar is gaining strength if compared to the euro. Or if we see, in the other hand, a range-bound market, where price is more or less flapping sideways, well, we can see that those two currency pairs are more or less in equilibrium, at least for the time being, right? However, there is a major problem with the standard Forex charting, and that's that the information we can possibly extract from one individual chart is very, very limited. And here's what I mean. Imagine we take a look at the euro against the American dollar chart and we see a nice uptrend, right? Well, all we can establish is that at this moment the euro is stronger than the American dollar. But in fact, there are many other possibilities that could also apply here. For example, they could both be rather weak, both the euro and the American dollar. It's just that the American dollar is a little bit weaker and therefore the euro is going up. Or, in the other hand, we could have both of them being actually rather strong. It's just that the euro is a little bit stronger and therefore the euro against the American dollar is going up. So again, just because the euro against the American dollar is showing a nice uptrend, it doesn't necessarily mean that the euro is actually a strong currency right now. Not at all. If we wanted to confirm whether the euro is actually a strong currency right now, we will need to take a look into every single euro cross, alright? The euro against the American dollar, the euro against the sterling pound, the euro against the Japanese yen, against the Swiss franc, against the Canadian dollar, against the Australian dollar, and against the New Zealand dollar, alright? We would actually need to take a look into 7 different charts, and if we saw uptrends on all of them, then yes, we could safely establish that the euro is a strong currency right now. But otherwise, just because we see an uptrend on the euro against the American dollar, that doesn't necessarily mean that the euro is strong at all, okay? Again, we will need to confirm that with all the different currency pairs related to the euro. Now, obviously, going through all the different charts, all the different currency pairs is basically a pain, is very time consuming, and here's exactly where the Forex currency index comes in play. In a nutshell, what this indicator does is to go through every single currency pair related to the euro and then establish which currencies the euro is gaining value against, which currencies the euro is losing value against, and also which currencies the euro is at an equilibrium with. Okay? And as a result, the Forex currency index will determine upon a complex algorithm the strength or weakness of the euro across the board. And that's exactly the key concept here, guys. That's gonna be strength or weakness from a global point of view, not from a limited point of view. Again, if you just compare the euro against one single currency, you're gonna have limited information. The Forex currency index is gonna give you information from a global point of view. And then the Forex currency index is gonna conduct exactly the same exercise, but not only on the euro, but also on the sterling pound, also on the Swiss franc, also on the Japanese yen, basically on every single currency. And on top of that, it's gonna run exactly the same calculations, but not only on one time frame, but in fact on every single time frame. On the 5 minutes, on the 15 minutes, on the 30 minutes, on the 1 hour, on the 4 hours, on the daily, and on the weekly time frame. So by taking a quick look into the Forex currency index, you will know in the blink of an eye the global perspective, the global outlook of the Forex market right now on every single currency, meaning how strong or weak all those different currencies are, and also on every single time frame. Anyway, let's take a closer look into the Forex currency index, shall we? As you can see, the indicator is divided in segments, one segment per different time frame. Okay, we have the 5 minutes, the 15 minutes, 30 minutes, and so on and so forth. Let's imagine your favorite time frame is the daily chart, and therefore this is the the segment on the indicator you will be paying closer attention to. You can see how each particular time frame is printing the different readings for every single currency, every single major currency. Okay, American dollar, euro, sterling pound, Swiss franc, Japanese yen, Canadian dollar, Australian dollar, and the Kiwi, the New Zealand dollar. Now, the indicator spans from plus 10 points of strength to minus 10 points of weakness. If you get a reading of plus 10 points, it means that that particular currency is super strong, it's kicking tail all across the board, and therefore is gaining ground against all the other different currencies. In the other hand, minus 10 points of weakness means that, that particular currency is losing ground, is losing value against all the other different currencies. Alright? Now, anything above plus 5 points of strength or below minus 5 points of weakness is considered extreme readings, and therefore these are the currencies that are gonna give us the best and easiest and most profitable trading opportunities on this precise day. Any other currency where the readings are around the zero line, such as the American dollar or the New Zealand dollar or the CHF or also the Japanese yen, well, those currencies, as you can see, are more or less around the zero line. At any rate, they are not beyond the extreme readings boundaries, and therefore those currencies are more or less in equilibrium with the rest of the market. And this is actually a universal trading principle. You cannot make money in a market that's at equilibrium, all right? You need the equilibrium to break. You need the equilibrium balance to tilt in one given direction before you can actually make money. And that's exactly what the Forex Currency Index does for you. It searches circumstances in which the market is not at an equilibrium from a strength and weakness point of view. Alright, let's get more specific. How can you actually profit from one of these situations of market disbalance? Well, here is how. Which one would you rather try it? The sterling pound against the American dollar or the sterling pound against the Canadian dollar? The sterling pound is showing -8 points of weakness, and it is clearly the weakest currency today. In the other hand, the American dollar is not really either strong or weak, it's more or less at an equilibrium with the rest of the market. Now, in the other hand, the Canadian dollar is showing +7 points of strength, right? And again, it's also the strongest currency across the board today. So, I repeat the question, which one would you cross the sterling pound against? The American dollar or the Canadian dollar? Well, obviously the right answer is that you want to cross the sterling pound against the Canadian dollar. And the reason for that is because you would be trading, you would be exploiting one of those situations where we see a market divergence, a market disimbalance, and those are usually the ones giving out the most profitable trading opportunities. Again, because you are exploiting a situation in which the market is not at an equilibrium. Again, I must repeat the basic principle here, guys. You cannot make money when the market is at an equilibrium. You need an edge over the market, and that means that you need to search for these divergences in order to find profitable trading opportunities. Let me show you what's going on right now on the 5 minutes time frame. We can see how on this particular currency pair there's no particular currency that's actually showing strength nor weakness. They are all more or less around the zero line, or at any rate in between +4 and -4 points of strength and weakness. That means that on this time frame the market as a whole is at an equilibrium, and therefore it's completely impossible to make money. Chances are that if you pull out any single currency pair, any single chart on this time frame, you will see most of the charts simply bouncing around, flip-flopping sideways, no clear directional bias at all, etc, etc. Can you make money when price is flatlined? No, you can't, right? You can't make money when price is simply moving sideways. So if you pull out your Forex Currency Index and you see that there is no divergence in the market, at least on your favorite time frame, your best trading decision is to stay out of the market, to not take any trade for the time being, until one of those disimbalances, one of those divergences show up in the market, one of those situations in which you can exploit, you can gain an edge over the market. Which is precisely why the Forex Currency Index can help you, not only finding profitable trading opportunities, but also finding those scenarios in which the best trading decision is to stay out of the market, at least for the time being. Alright, here we are at my actual Forex charting platform, and as you can see I have the Forex Currency Index plotted on my screen. Let's take a look at what's been going on today. For example, from an intraday point of view, let's pick the 30 minutes time frame, for example. Okay, and we can see how the Japanese yen has been the clear winner on the weak side. We've gotten a 9 point of weakness reading as per the Forex Currency Index. That means that the Japanese yen was indeed the currency to sell today, since it's again the weakest one. You want to sell weakness. Now, what currency should we cross the Japanese yen against? Well, we have three potential candidates: the sterling pound, the CHF, the Swiss franc, and the Canadian dollar, all of them printing a +6 points of strength. So any of these three would be fantastic candidates to cross the Japanese yen against. Now, let's pick any random one, for example the sterling pound, and see how it performed today against the Japanese yen. Here we are. This is the Japanese yen against the the sterling pound against the Japanese yen, also on the 30 minutes time frame. As we can see, this is the beginning of the day. That's where today's price action opened up, and it was trading as the day was opening at 136.33, whereas right now price is trading at 137.89, and therefore this currency pair has seen 160 pip run to the upside. What a very nice run to the upside, obviously in the direction of the Forex currency index. Please mind that the sterling pound is the strongest currency, right, or one of the strongest, whereas the Japanese yen is the weakest one. So if we are to search for trading opportunities, you want to search for trades in the direction of market strength against market weakness. So if we take the sterling pound against the Japanese yen, you want to buy the sterling pound and sell the Japanese yen. That's why you want to search for buy opportunities on the sterling pound against the Japanese yen. Do you see the relationship here, right? You want to buy strength, you want to sell weakness, and therefore you want to buy the strongest one against the weakest one for that currency pair, okay? In this case, the 30 minutes time frame. As a result, 160 pips run to the upside. Beautiful trade. Alright, let's now look into the other end of the spectrum. Instead of looking into the intraday price action, let's now look into what's been going on from a long-term perspective, in case you are a long-term trader yourself. Alright, we can see how they, again on the weekly time frame, both the euro and the sterling pound have been the weakest currencies across the board, both of them printing -7 points of weakness, whereas the Canadian dollar and the Aussie, the Australian dollar, are both of them giving us +6 points of weakness. All the other currencies, New Zealand dollar, Japanese yen, Swiss franc and the American dollar, are all of them in equilibrium, so it's not worth it to search for trading opportunities in those particular currency pairs. We will only be interested on trades on the euro and the sterling pound, and more specifically if crossed against the Canadian dollar or the Australian dollar. For example, let's pick the euro against the Australian dollar. Alright, again, what's the idea here? You want to buy strength, you want to sell weakness, and therefore you want to search for short opportunities on the euro against the Australian dollar. Why? Because the euro is weak and the Australian dollar is strong. Therefore, the most optimal option here is to search for short entries on the euro against the Australian dollar, again from a long-term perspective. Now let's pull out the euro against the Australian dollar chart, again on the weekly time frame. Let me bring it up here, actually there, so we can fit everything on my screen. And as you can see, do you see that beautiful down move we've seen as of lately on the weekly time frame? Again, because we are selling a weak currency, in this case the euro, against the strongest one, or one of the strongest one, which is the Australian dollar, and as a result the only possible outcome we can see is nice short opportunities indeed. Alright, let me now prove how the Forex currency index can help you finding not only the currency pairs you want to trade, but also finding the currency pairs you do not want to trade. On an earlier part of this video I was mentioning that you cannot make money when the markets are at an equilibrium, right? You cannot make money trading a currency pair that's sitting more or less around the zero line. Well, on the weekly time frame, for example, we have 1, 2, 3, 4 currencies that are more or less in equilibrium. We have the American dollar, we have the Swiss franc, we have the Japanese yen, and also the New Zealand dollar. No matter what currency pair or what cross you form by crossing these any of these 4 currencies, those are currency pairs you do not want to trade, because the currencies in themselves are at an equilibrium. And I'm gonna give you an example. Let's pick 2 random currencies out of these 4. For example, the New Zealand dollar and the Swiss franc, for example. Alright, so we are gonna cross those two and see what's been going on the weekly time frame on the New Zealand dollar against the Swiss franc. Alright, let me give you a second. I should have the chart somewhere around here. Alright, here it is. Let me bring this to the right so everything fits on my screen. Okay, here we are. This is the New Zealand dollar against the Swiss franc, also on the weekly time frame. Take a look at what's been going on as of lately. Imagine you took any trade in there, alright? Imagine you took any trade as of lately, again, off the weekly time frame. Well, price has been doing nothing but flapping sideways. Do you reckon you can make any money here? It's absolutely impossible to find any profitable trading opportunity when price is following this structure, because both the two currencies involved in this currency pair are at an equilibrium with the market, and therefore we are not gonna see any major move. We are just gonna see price totally flatlined, which is indeed what's been going on as per the last, well, as per the last few weeks. Alright, so that's exactly how you can also use the Forex currency index to stay away from problematic trades. Alright, well, that's all I had for the trend scanner and the Forex currency index. As you can see, two fantastic indicators, totally high profile, totally advanced, and well, unique, again, because they've been custom coded for me by my professional programmer. So if you want your own copies of these two advanced indicators, you can sign up here on this page. You'll gain access right away to the download links of the indicators themselves, also a step-by-step, easy to follow installation guide, and finally a full video where I explain in detail how to use the indicators to search, to implement them into your daily trading routine, to search for trading opportunities, and all in all to make the best use out of them. Now, I am so sure, so certain that these two indicators can make a world of a difference in your trading and obviously on your trading performance, that I'm gonna give you 30 days to use these indicators, no obligation whatsoever. Place your order, download the indicators, watch the instructional videos, and then in 30 days time decide whether you want to keep them or not, alright? If they haven't made a good chunk of pips for you, just simply send them back and ask for a refund. As simple as that. Again, there is no obligation whatsoever. You have 30 full days to try them out before you've got to decide whether you want to keep them or not. So, as you can see, it's effectively 100% risk-free purchase. So, you have nothing to lose. Go ahead, place your order and give them a try. I'll be waiting for you at the download area. Cheers!